Hello everyone! Welcome back to the RationalInvestor.com's day. What is this? This is our Broiler Chicken Show. This is the weekend show. Hello everyone. I do so many videos on the site and as well as classes. Sometimes I forget the script. Hey, what is this? This is our Broiler Chicken Show. This is the weekend show on YouTube. So that's hello everyone. I do so many, well actually many videos on the site and as well as just muted. Hello, Bob. Bob T's over there on YouTube. And hello, Omar. Nice to see you. It's going to be awfully tough for me to put as the positive spin on today's commentary about crypto. And primarily this weekend is specifically designed for addressing the current level 1 program. What did you guys do this week? Did you guys do Willie? Are you guys on to overbought, oversold oscillators? Yeah, good, excellent. All right, well, so actually now you guys should be understanding market structure in things like MACD, Willie. Remember you did market structure also in your introduction to technical analysis with a bit of use of the RSI indicator. The great part about Willie is it's just a really simple tool just to identify overbought and oversold conditions. Put the Willie overbought, oversold, or what we like to call stupid, in conjunction with MACD divergences, confirmed divergences on the histogram, and wow, what a powerful price momentum tool. Just absolutely stunning. So all you level 1ers, and then of course if you can find OBV divergences, they're very rare. But if you can find them, holy moly, are they powerful signals. In fact, I think we saw one in, I can't remember what market it was, late last week, and sure enough, the market rallied smartly off of that. Part of the purpose of this weekend show is to help the level 1ers. We had a couple questions in the class. And I even know in the lounge somebody said, Brian, where the hell do I ask my damn question? Okay, so fire away, Casper. I need that question. And then somebody also asked about fib extensions and retracements, and through class I said I would make reference to that in the broiler chickens, because actually I think we had a really good example of that just here on Bitcoin off the lower time frames for all those people who fancy themselves sharpshooter traders trading off of like hourly charts. It's probably a good idea. So while we're waiting for that, Casper, and just type it in the lounge there and maybe put an at me so it blings. But if you can type that question, if there's any other level 1ers, quite a few guys here, you are all in the... Gotta say, Peter Arnold here, and it's weird how it works this way. Like, you put out a little bit of positive karma out into the universe. We had a raffle through one of these Broiler Chicken Show, and he happened to win the raffle seat for the school program. I think he's getting pretty good value out of the material. He seems to be on the site every day. He's definitely getting value out of his win. There's no doubt about it. He's taking advantage of this absolutely full bore, which is great. Totally awesome. Way to go. But also, too, he's helping me write some really cool scripting and coding for automating our newest day trader model that I've been working away on through the fall here. Our I want to be a day trader model. And I gotta say, man, I don't know, Peter, did you see that signal? Because it just came in and looks like it was spot on. And what's really, now I don't know what happened here. We got arrows going in both directions. I haven't seen that signal yet. I don't know what that means. But I want to be a day trader, and actually I want to be a day trader did pretty good through that last reporting period. I hope if I reload the new script though, I wonder if it kills all my. No, I guess because the lines are there. So let's see what it says here. Thought I did up. Yeah, here it is. So that last reporting period had 35 trades, 23 winners, and 9 losers and 3 scratch. Not bad statistics. What your trade size is. I just simply set this 2 to 1, and ideally, and we've talked lots about this on the site. Doing this on the spot market is almost impossible because of the commissions that they charge in crypto. But you can consider doing this with the forwards contracts. And even there's some sites that their margin rates are actually really low. So please understand, this kind of thinking is off of things like forwards contracts and stuff where the leverage is very, very high and the relative commissions are low. But nonetheless, our little scripting program changes the background screen color if all 3 reporting time frames are all pointing in the same direction. Then you get a trending signal, and you just basically take every fractal. And what Peter and I have been working on away here just of late is getting TradingView to actually see these fractals and issue trade alerts. And this is not the Williams percentage fractal tool. This is Peter's script. So he's actually figured out how to post these, and so we're sort of working it through. Please understand, totally beta. Not, selling any subscriptions off of this. It's a TradingView script that Peter and I are basically, if you ask us if you have permission for it, we'll just add you to it. It's kind of one of those value-added things about being a site member. We all sort of work together. But anyway, it's kind of fun to watch it in action. And as you can see, it's gone back into uber bear mode. It's hunting setups away here. Looks like overnight it had 2 wins, 1 loss, 1 scratch so far in this reporting period. And I thought it was really cool that the script not only identified the fractal, but also identified the actual trade signal here. So super stoked about that. And who knows? I mean, this thing might fail. It's just the way it goes. It's a trader's life. Just try and make sure, what's really cool about this is, of course, when the market's strongly trending, it produces those kind of reports that you just saw there a minute ago. When the market's ranging, it kind of goes like sort of 50-50. 50% wins, 50% either scratch or losses. But the key here is when you're right, you get paid $2, versus when you're wrong, you only lose $1. That's the key to winning at this game, people. Please understand that. Learn it, live it, love it. You're not going to be right all the time. Just get used to it. That's actually, we just did our writing scripts modules for the level 2ers. And that's such a hard idea for new people to trading to understand why computers are so good at algo trading is that they don't have any emotion. It doesn't matter if this level's taken out. Boom, trade's closed. Simple as that. On next bus in 10 minutes. Anyway, sorry, I got off on a funny tangent, but I was just looking at the people that were in the lounge here, and I saw Peter there. And it's just such a great commentary of this sort of, this is almost like a life lesson, everybody. I mean, regardless of Bitcoin. You know what I've learned? This is Brian on his pulpit. Sorry, everybody. Philosophy 101. 2013, 2014, I kind of came to this arena. A lot of people thought I was stinking rich and like, why on earth would he bother doing this? I had gone through an absolute life tragedy, and ironically enough, it was the exact opposite scenario, where I was like literally, we don't need to go there. I was in a bad place. By me sort of being generous to this community and giving my time and hopefully low prices just to try and make sure that people felt like they really got really good value for their money spent, I think the universe rewarded me. And it's sort of one of these yin-yang kind of things. And Peter here is an excellent testament to this, where I think, the universe sort of rewarded him a little bit. And it's remarkable to watch how nobody's asked him to do any of this. He could have just come and done the class and just, been a lurker on the site. But for some reason, he's just stepped up, and he's actually made a positive difference in my life. And ironically enough, I think I've easily gotten the price of the course out of him and the value that he's given me and the site, because he's an active participant on the site. So it's a beautiful testament to sort of that whole karmic experience here at TRI. I love it. So thank you for actually reaffirming my faith in humanity, Peter. It's what goes around comes around. So thank you. Okay, wow, holy philosophy. Sorry, everybody. You're like, when is he going to get on to the goddamn price charts? As I had sort of said to begin with, and I like to keep these weekend shows primarily sort of crypto-oriented. I won't go into stock market here today. But, it's awfully tough to spin the story any differently week to week to week. I mean, the story doesn't really change a heck of a lot. We've been talking about this interesting study, and it's actually interesting. The gentleman, this, what is it, Phil B or Fit B or something like that, he and I were like these ships passing in the night. We every once in a while reach out, getting together and doing like a video for the TRA people. That's not a bad idea, right? And then the ships sort of sail off in different directions. I thought it was interesting. I put a tweet out about long-term demographic cycles and how I think we're actually now in the process of transitioning into the growth cycle. And he was like, yep, totally on board with you, Brian. I see it too. So I do like the fact that we're sort of, similar thinking. And one of these days, he and I'll hook up and we'll do a video for the site. But this is his study that I sort of replicated, and this kind of argument has been passed around the crypto universe for a while. So it's certainly not like it's like a brand new concept. Hello, Ali. He says, hi, Brian. So thought I'd say hello back to Ali. The problem that I have with this chart now, and there are people in the public who seem to have a fairly, maybe it's because I'm so political, I don't know, but there are other people in the public that seem to garner quite a following, and yet I don't really see they got absolutely ripped apart in different market calls. But anyway, this gentleman has come out and made a rather bearish prediction of Bitcoin, and frankly speaking, I can kind of understand his thinking, in that if we look at this price pattern here over the past 6 to 8 months, actually this is a pretty well-known, pretty well-defined pattern. It's called a head and shoulders pattern. It's basically a fractal. If you think about things like the Canadian maple leaf, hopefully you can kind of see how that looks, kind of maple leafy, right? Terrible maple leaf, I know. But the point here is this failure through this level here, this 7,200 or so, that's not good. I was kind of hoping, and the jury's still out here, I was kind of hoping that maybe we might see enough buying interest at Mountain Man and the way that they sort of engineered this low to generate liquidity to get filled at that Mountain Man level. I was kind of hoping that we would see some sort of reversal off of these levels. As it stands right now, of course, we just got a big fat red candle. And remember, I tell all you guys, and that's off of which chart? This chart. Remember, we've been watching this one for a while with you guys. That we can't even really get bullish until we see, this candle finish. And I remember as this candle was progressing along here, we're like, okay, maybe it's gonna finish here. No, maybe it's gonna finish here. No, maybe it's gonna, we just broke the lows. Oh boy. But we can't even start to get bullish until we get at least some sort of like higher low kind of idea, some sort of inside bar kind of development. You notice like when we went down here, we stopped making lower lows and started painting green bars and started painting higher lows because we just broke to new lows. Maybe that's this kind of scenario here. At best for us to be like, woohoo, this is a bull, right? It means, let's assume that this is the lowest low. Look how long this bottom took to develop. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks before we actually go, yep, this thing is a bull. Get ready, rock and roll. And even through this, I remember we're kind of like, yeah, we've got upside targets in the 6,000-7,000 area. You can see sell halves on doubles kind of. This happens to be the 2 to 1. So, once the bull's unleashed, where the hell is the top? But the point here is that it's going to take at least this kind of window here just to undo a lot of technical damage that we've actually done here over the past, say 8 or 9 bars here. We've done a lot of technical damage. So, that's the backdrop for moms and pops. I do like the idea, call me a weirdo, but I do like the idea that the fact that we are backing up into reload zones within reload zones kind of idea that, if you were like dollar cost averaging, little old ladying, all that kind of stuff, at least now we're at a level where you're not coming in and FOMOing and buying the fluff. And you actually do know that there is going to be some institutional interest once we're back into this level. But that in itself isn't a quote-unquote buy signal. That's just simply saying, look, I don't want to chase. And keep in mind, this is a log chart, right? If we put this on a regular chart, I don't want to chase. What I simply want to do is wait for at least, a good 60% of this rally to be taken back. And now I'm not worried about buying the fluff. But as everybody in altcoin land learned, that just because we're at reload zone, that doesn't necessarily mean we have all the necessary ingredients to go and take high leverage long bets and mortgage farms and stuff like that. But I don't mind the idea, and I think I said to you guys in the public show, we're going to get we've got a local team here in Vancouver, 2 TRI alumni and myself, and we get together fairly often. So we're like, well, why don't we throw a few grand into a pot and let's go have some fun on Deribit while Canadians still can play there. And ironically enough, we just got this going because I do like this as a buying window. And we're looking to be buying calls. But ironically enough, our last meeting, and we meet once every 2 weeks, is we said, all right, we're now at least getting down, the fluff is gone, so now we can actually start accumulating the Bitcoin that we're going to need as our base capital for the Deribit platform, because everything's off of Bitcoin. So we're only now actually starting, and the plan is that once a week over the next 8 weeks, we're just going to dollar cost average our way in, not try to time the market, because we might get one candle that just pukes the bed here, another candle that zips right back up, and if you try and time the market off of something like Bitcoin, sometimes you get the craziest prices. And first and foremost, I don't have any buy signals here to actually get a buy signal. And, if we do get a buy signal, by that time, I want to be loaded up on all my Deribit call options. I don't want to be accumulating my capital. I want to be ready to rock and roll. So, I'm kind of thinking that, at least now we're in the position where we can start accumulating, and we've got cash. So we can start accumulating our Bitcoins for our sort of our leverage proxy plays and through the options on Deribit. So that's just an FYI for you. I don't really mind the idea that the fluff has been taken out of the market. Here we are, $7,000. The irony of it all is we still technically, if the logic that we had back here about the cost of production being 25, 26, $100, maybe $3,000, something in that neighborhood. Has anything actually changed here? And if I understand correctly, there's a whole new generation of miners and stuff that are coming out that are even more efficient. So I don't know what that's going to do to the cost of production. But, I think our argument is that if, 2,000-3,000 was the cost of production here, then only after the halvening event do we actually see that $5,000 event. And that's the spring. Could we have some effery here over the next few weeks through November? I've noticed November is usually not really that good of a time period for Bitcoin. I don't know. Every once in a while, every few years, you get like the end of the year, things go absolutely nutso, and it's sort of like, well, that throws all that out the window. But on balance, I've found that the end of the year isn't really the most friendly time for crypto. But, seasonality aside, I'm not going to get into that right now. But I don't mind the idea of now actually forcing yourself, especially with the idea that the new cost of production is going to be 5-6 grand, something like that. I actually don't mind the idea that you just simply say, look, I don't know where the bottom is here. I'm a little old lady. I'm just going to go and nibble my way through here, like I said, for our Deribit options sort of idea. And ironically enough, with that being the case, I'm actually rooting for lower Bitcoin prices over the next 8 weeks. Because I want more Bitcoin with the capital that we're injecting into this plan. So, that's just an FYI for you. The actual trend itself, I mean, let's call a spade a spade. We've talked about this at length. And that's why I say it's kind of tough for me to come up with new things to talk to you guys about and sort of, oh my God, check this out, because we just actually had a pretty nasty bearish message. And so now Brian's going to be rambling on for the next probably at least 6 to 8 weeks about, lower lows and lower highs. And, we were contemplating for quite a while. And actually, I even put this tweet out like probably about, I guess about 6-8 months ago. I think I seem to remember putting it out here. Maybe through the summer. And it was, at that point, interestingly enough, actually, we could probably tell you exactly when it was, because this potential AB equals CD bot setup actually had the targets right up against these old highs. So that must have been off of those levels that I was first posting this, are we a trend or are we a range? And of course up here, when I posted this out, everybody's like, oh, we're not a range, we're going to the moon, man. And the irony of it all, of course, is, and this is this sucky part about this, and you can sort of see here, last time I updated this, I said running out of room here beyond 66, and this potential bullish setup is off the table, and that was 67.84 based off of this Coinbase chart. And notice this low here, low is, where the hell is it? Survey says, it's not going to show me. The low is 67.75. 75 is lower than 84. That officially means bye. So, unfortunately, the crappy part about this is actually we just found out whether this was a range or a trend. Fortunately, guys, we are very much a range. So we'll go back and we will go 100%. Boom. So, have you seen this image from Brian before? Probably. That should kind of look like, well, I mean, this is the big picture. And to all intents and purposes, I actually like this thinking here, where this was that sort of cost of production, and probably, the new cost of production puts us somewhere up in this area here. And, maybe we just sort of bang around. The interesting thing about this is now, what's really freaky is that I had, back when we were sort of in the winter time here, well, and especially when we were coming down here, I had sort of postulated, could this potentially be a massive harmonic? And I'm not, you never know how these things are going to play out. and of course, all my, we teach harmonics in one of the one of the modules on the course, and it's hilarious now with the students. And I love this because, if anything, it's absolutely perfect. But what should happen here is Brian should sort of introduce you to a bunch of concepts, and then I never know what's going to appeal to one person or another. Some people, they absolutely fall in love with GAN and they head down the GAN black hole and never come back. Other people, they absolutely, and we like, what's so cool is, like, in the stock market, I won't talk too much about it, but I'm super bullish on energy right now. And my assignment for the current level 3ers is find option trades where, if the market moves back to 50% of the 52-week range, and so here's November, so basically it's that 52-week range there. There's the 50% rule, and that's $53.20, and somebody went and found me an option. And hopefully everybody can see this. I mean, this is just trading 101. If and especially with the options, because the options, it makes it so easy. But if I go and buy that W, there's no guarantees it's going to work, right? It's trading. But if I have a 50% rule as a target objective, and you can see there's gaps to be filled in here. So I think there's lots of upside potential. That's a 7-to-1 risk reward. Damn, stone cold. 7-to-1. And of course, I'm not quite sure where I went off on this, but the level 3ers right now, they're basically actively hunting these ideas for me, and I love energy right now, so that makes perfect sense to me. And this is the kind of thing that I want to see happen in Bitcoin for, our little local Vancouver Bitcoin Deribit trading plan. So, these are the kind of setups that I want to see to get excited about that, but I'm not quite sure how I got on that tangent. Sorry, everyone. Where the hell was I? Oh yeah, I was talking about harmonics. So the point here is that Oxy is, that's another way to trade using derivatives information, blah, blah, blah. Other students, in our level 3 program, we introduce you to trading harmonically, and harmonic patterns. And it's so fun watching them head off down the rabbit hole. And I even noticed one student's kind of like, well, Brian, on your cheat sheet, actually, one of these numbers are wrong. And I love that, because it means that they've gotten to the point where actually now, it's no longer sort of Brian's the teacher and you're the student. We're all working together to be better traders. So if I understand correctly, we're supposed to get rid of one of these fibs off of this cheat sheet on the butterfly. But, that's here nor there. That's a shout out to Own. Yes, Own, I'll get around to fixing it. But anyway, point of the matter here is I did up this chart quite a while ago thinking, I wonder if this was like a Gartley or a bat. Notice, of course, we had that infamous 61.8 fib tag there through the summer. I mean, just perfect Mountain Man. And now finally Mountain Man's been vindicated here, and he's had his level traded to. And I do remember through that past that past down move, I kept contemplating, though, why has Mountain Man not been hit? How could this be the bottom? How could it turn enough? It wasn't. But, I wonder now whether we're setting up some beautiful harmonic pattern here. And I kind of put this out back when we were coming down through this kind of stuff, or I can't remember exactly when I did this originally. And what I found really interesting was, if I actually do all the levels and numbers out correctly, this pattern actually sets up almost perfectly into the U.S. presidential election there in 2020. Now, I don't know. Maybe that means that we have to come down a bit further here on this leg. But, if this is a range, I guess that's where I'm trying to go with all of this. If this is a range, then actually I think this is what our future kind of looks like here. And I don't see any reason to change that thinking now. I know it was terribly unacceptable of Brian to suggest this, but I really do believe that Bitcoin was that fear asset cycles proxy, and that's why it acted the way that it did. And this to me seems like very natural sort of expression of that parabolic move, sort of playing itself out naturally. I mean, who knows what the hell's going to happen? I mean, nobody knows. But definitely like the idea of, at the very least, 78.6 is now. And what I actually find happen, and I think this isn't coincidental, is notice this original market structure here. We could probably also do things like AB equals CDs. You know, maybe even this leg, boobity boo. And then boobity boo. Oh, hello. So we're starting to, you know, you can actually see the market is starting to project down into this 78.6. And what I was going to say there a moment ago was I often actually see the market loses 78.6 and then ultimately bottoms off of it down the road. And that's kind of what I'm thinking here at the moment. You know, this is a higher time frame. I don't know what the end of this year looks like. We all know that big January Pluto, Saturn cross is coming up. But I can feel a whole bunch of sort of catalysts all coming. We know that the Jupiter-Saturn cross is next summer. And it's really weird. It's sort of like, and I don't know whether it's just personal, but I have actually asked people, and they've been like, yeah, sort of, it's really tough to make serious decisions right now. I don't know whether you guys are noticing that. And I guess I kind of also see it in sort of world, you know, macro kind of things going on. You know, Brexit, they can't get their act together. You know, China-U.S. trade deals, nothing's really getting done. And I kind of noticed that, you know, with TRI, we've had a whole bunch of projects that are on the go, but they're just not solidifying. So it's, I get a sneaky suspicion this is almost like, you know, like humanity-wise. When I tell you, when they Jupiter-Saturn cross, that's a big celestial event for us. But anyway, that's Brian and tinfoil hats and all that kind of crazy talk again. So, I mean, big picture, is this a buy signal? No, there's nothing really to do here, big picture wise. You know, I'm worried that things like Head and Shoulders, this is this Mr. Brandt's kind of thinking right now. He's got the whole sort of crypto space in a tither. Fascinating that if you actually play that Head and Shoulders out, there's that 88.6. There's the original market structure bottom. I thought there was one other sort of compelling reason. I think I'll just leave it at that for now. You know, and of course what it would mean is a complete disconnect of Mr. Philby's thinking. So I don't know. I'm of the opinion I'd really like to see the market. Maybe we have some big FU event here. Maybe we get some crazy ass shooting tail. Shooting tail? Is that, I know, shooting star. Some crazy ass hammer event. Maybe we have somebody publicly come out. You know, somebody on Twitter, I don't know, did you guys see that? I thought it was really interesting that somebody is really trying to stir up the FUD in crypto and stuff. And this person put out this kind of tweet. I don't know whether that's really helping the situation or hurting it, but you know, this is the kind of environment that we're in here. I get the impression that this was all just a hoax, but nonetheless, you know, it sure feels like we're in that kind of environment where everybody's sort of waiting for the shoe to drop, somebody to crap their pants. All right, I told you this wasn't going to be really that happy of a report, guys. I'm sorry, but that's sort of what I see off the higher time frames. It's not a pretty picture right now. I'll tell you that much. Lower time frame participants, you know. Actually, this is another chart that I pulled up that I did months ago, and it's fascinating how I overlaid this price action on top of this and sort of postulated that the pivot would come in off of 78.6, and it's kind of freaky how close prices actually followed that. So again, another sort of prognostication that into the end of the year is actually when we should be looking for our big buy signal and into. Also, too, tax loss selling purposes, that would make sense too. That basically a lot of people are incentivized now to book the tax loss. Anybody who bought GBTC and all that kind of stuff. And coming into the new year, new decade, fresh approach, new Pluto Saturn relationships and all that. Maybe we're gonna forge our lows through the end of the year. Who knows? And I suppose this sort of takes us to the next conversation. Well, actually, before we get into alts, we'll just simply say, we had this sort of writing on the walls that things were going to be troublesome. There were sort of inside bar potential reversals off of support zones, but I don't see anything holding here. So, unfortunately what that means, like this inside bar, if you took the trade, then if we lose these lows on inside bars, you got to get out. And, it's a trader's life. Get used to it. Do we have enough anecdotal evidence to think that the market was actually trending higher? Fortunately, we're kind of hunting longs in this kind of environment is, you're kind of swimming against the tide. It's difficult, right? And if that's not for you, then throw on something like a weekly 1330 moving average relationship screen and just simply say, look, I'm not allowed to buy until these things are pointing up. It's really as simple as that. All right, so Mr. Happy, Joy, filled with wonderful, happy thoughts here. Here's an interesting study we were doing off of CME. And actually, this is an interesting point that I don't know whether if you are a candlestick aficionado, then for this quote-unquote gap, this hole in the price charts to actually be filled in, quote-unquote, completed, you actually have to have a candle body come down here, right? Either a big red or a big green, but a body has to fill this space. So, this tail here, for example, I would not consider this candle gap filled with this crazy-ass tail like this. So, on this move down here, I did hear people starting to talk about this gap on CME being filled in, but I don't think it has yet. What I'm worried about here, and I've kind of talked to you guys about this before, and if anything, it's a good reason why we should probably be watching CME contract. It's very dangerous. Remember when we did this off the cash market, we just watched all these people over and over and over all pile in on the long side on trendline breaks, but the problem is trendline breaks themselves are terrible trade locations. You actually have to get a W on the other side of the trend line to actually validate it. And I think that's exactly what happened here. We get a big trend line break, but is there a W that comes in? No. If anything, a big fat M comes in here. Oh, crap. And more M's and more M's. What also I find interesting, and I thought this was, and Murat even gave me a shout out. Appreciate it, Murat. But he was like, we've been following this chart for quite a while, and I draw all of these squigglies and these boxes and all of these fractal references. Like, actually, I remember. And, here's, guys, do you remember I told you about this? Everybody on YouTube, go back and watch. I purposefully put this Goldman Sachs reference mark here. Goldman Sachs comes out here and recommends buying Bitcoins to their client base. Do you see why? Usually when Goldman Sachs says do something, do the exact opposite. I left that on there on purpose. But that's basically the last time that I updated this. And I just said, okay, let's see what happens. And what I think just happened here is notice the big down flush and down flush, then big spike counter trend rally, big spike counter trend rally. Look at these funny little highs, funny high, funny high, funny high, funny high. Then gadoosh, boosh, right? Doosh, kaboosh, doosh, boosh, smoosh. So I get the feeling that we just went through this part of the fractal. That was this. Which tells me, ironically enough, I think we could actually like bounce right back to this level, doink, and then resume our down further. So, unfortunately, until we actually start seeing W's on other sides of trend lines and stuff, I'm still thinking that this kind of price pattern is dominating. If anything, now what we should do is say, okay, it looks like we are here. So let's see, next Broiler Chicken Show, what happened. But I got a funny feeling we're going to look something like this over the next week or two. And in a weird sort of way, you can kind of see tails are already starting to form here. We know that this is probably going to be a pretty significant resistance line just off these double bottoms. I'm sure there's some trap bulls in all of this. And notice also, too, that's the original breakdown level. So this is a pretty damn important level here on CME, this 8,500 area here. I wouldn't be surprised if there's some sort of counter trend rally up into that level. But now we're starting to talk about lower time frame stuff, people. So, I purposely, a lot of the times with these public videos on YouTube and stuff, it's not really in my best interest to start drilling down to like hourly charts and stuff, because within a couple hours, especially it being Sunday, a lot of the levels change and it's sort of like, well, that was pointless. But nonetheless, I'll just sort of give you sort of a view of what I'm seeing off the lower time frames. One thing that kind of jumped out at me again, sort of back to, where's the best place to show you this? Give me a second here. Well, I guess we'll just operate off of these. I was kind of thinking, once upon a time, maybe, well, no, I'm just wasting time. Sorry, everyone. Okay, yeah, so, no man, that is more higher time frame, no man's land. We've dropped pretty far. And like I said, off the weekly charts, we've dropped so far that we're actually moving pretty far away from moving averages. I know, and everybody's like, quit jumping around from charts, Brian. Just stay on one damn chart. Anyway, so, even 13 EMA off of the weeklies is sitting up here at about, what is that? That 87, 8,800. So, ironically enough, short-term resistance, that's actually where I think it is right now. So, kind of like look left. If we can inside bar here, and we start moving up, this is all open air. So we could very easily rally back up into this level, no problem. We'll see how this goes. I mean, there's no sort of indication off the weeklies that we've turned at all. But it should just show that, this is in essence our trading range off the weekly charts. Top of the range is 10.3. Bottom of the range for now is 6,800, and we really don't have any indication that the bottom of the range has actually been established yet. But, with that backdrop, you can start to think about things like 50% rules. So, if we do actually bottom, what can some of those 50% rules sort of look like? So, ironically enough, there's that 8,700 number again, 13-period EMA on the weekly charts. Believe it or not, that's actually resistance to me. And I do remember, that, like, what I really do think happened here, which is kind of a bummer, but, welcome to capitalism, is, they put this floor in here, and a whole bunch of people said, that's it, this is the bottom, I'm going to risk against these lows, and away we go. And it was, if I'm not mistaken, I think it was like a AB equals CD objective. So, I mean, I can kind of understand that. But as I had said before, it was above that 61.8 off the higher time frame, so that did concern me. But anyway, that's here nor there. So what I think sort of happened was they put the bottom in. They encourage a lot of people to sort of think this is the bottom. And, you know, maybe they bought here, whatever, and they just simply said, look, I'm going to risk against this low, and if it breaks, I'm gone. And then there's probably the people that, you know, as price was working down, things like reload zones, they, you know, they maybe bought in here and just said, look, I'm going to take this risk. If we break this low, I'm gone. So, in essence, what ends up happening is you actually get what they call a liquidity pool that builds up here where, you know, savvy traders, old-time traders, they see, and this was one of the reasons why I thought the guy that I worked with at Top Step, the reason why he built his whole trading platform is he wanted to actually have sort of a data reference to actually see all the stop loss orders that are starting to accumulate here. And remember, these people are long, so that means these are going to be orders to sell. So if I wanted to buy that mountain man level and I wanted to buy in size, and remember, institutions buy in size, how am I going to get filled in size at that very big, significant level? What it means is I got to get a whole bunch of the public to sell. So in comes the manufactured bottom, whole bunch of stop loss orders to sell. They run those levels, a whole bunch of orders to sell trigger right into that bigger, higher time frame level. So I got a sneaky suspicion that quite a bit of that just happened there. If that is the case, right, then what we really should see is we should see quite a fight off of this mountain man level. And I do believe that actually that's exactly what we're getting here. So big dumps into those levels, and I thought it was really interesting that right out of the gate, you know, this was, it happened to be a channel level hit, but I think that was the mountain man level hit. Let's go on over here. And I'm sorry I'm jumping around, everybody. I'm not very, I'm a bit scatterbrained here today. Just want to make sure these levels are correct here. And we can use this chart. It's perfectly fine. I can get rid of that for now. Okay, are you exact? What does that say? 13,868.44. Oh, that's pretty close. And what time is it? I don't want to go too far past noon here. I got Liam to get to. Alright, so that looks like that's set up. So there's the mountain man level, 72.31. And notice that is right there. Roughly. And notice all of these stop loss orders are right there. So, nice little liquidity window. Now, sometimes the market pushes, it's such a dramatic liquidity push, because remember, all of these become like market sell orders, right? If we zoom down to like the hourly, let's see what it looked like. So, yeah, you can see on the hourly coming into those levels, as soon as that level was tripped, the market just went into a free fall here, right? But what was fascinating about this was, are we taught to look for anything in particular on lower lows to maybe suggest, because remember, this is a green zone now. Is there anything we want to be sort of looking for here to maybe give us an indication that maybe this is close to a bottom and not a top? And where am I going with all this? What I wanted you all to say is divergence! Ah! Can you see that MACD histogram, even though we went lower, MACD histogram did not? Can you see off of things like the oscillators and all the level 2ers just did this? Level 1ers, beg your pardon, Willie. Look at this W in Willie there. Beautiful divergence. And, is he stupid? He's close. Not really. I guess he was back stupid over here. So we already did get a stupid reading. So if anything, great example. And, if we want to look at things like RSI, do we get any divergence here? Looks like that low is, what does it say on there? That low is 17.89, and these lows 12.13. Monster divs. And actually, this is what we like to call a double divergence. And Brian, all the ladies know how to end that line. Oh, I'm going to get myself into trouble. I shouldn't say that. So we go like so. And actually, this is a ray, so we can just go like that. All right, so you can see boobity boo and boobity shmoo. And you can also go other divergence and other divergence. So, as of this point, we're actually being given quite a, and this also is a really good example of my two W's theory. And the second W, so the first W is right here. Right, that breakout. And then the second W comes in on the big breakout there. So actually there's like two. So hugely powerful reversal signal there. Now, what I find, and there is that inverted empire that I talked about. Huge formation. So I got the impression that sort of, and I put out a tweet to that effect, just sort of saying, look, we just came into a big higher time frame level. And, the level 3ers you're doing working with the DOM. Thanks, Bob. What's really cool about this is, can you see the OBV div in here? And keep in mind, this was a big red candle. The sky's falling. And then as this candle sort of hammers out here, the actual bar turns green. And that actually solidifies that OBV div. So it really shouldn't have surprised us to see a reaction off of the lows. But here's kind of the kick in the pants. And if anything, this is a really good lesson of sort of just listening to the market. The market is going to do what it does, right? I think, heading into the big dump event, into that higher time frame event, we had to expect some volatility, so not a big surprise. But usually when we hit these really big event levels, what often happens is you get sort of these crazy-ass violent reversals. And then, of course, wicks and tails like to be eaten, which in essence, as of basically when you saw your chart look like that, you should have said, holy crap, well, there's our new trading range. Basically, top of the wick, all these trapped bulls, they would desperately love to get out. If the price can actually get up there, they're going to be selling. And vice versa, trapped bears. Remember we said that candle was heavy volume, but it actually finished green. So there's a ton of trapped bears in there. If we get down into that level, it will give them the ability to get out. And guess what? What's really interesting about this is we rallied up off that inverted empire. And then we started stalling out off of sort of, couldn't even get back to mountain man level. Which is really interesting. I would have expected that mountain man level to be hit, but it wasn't. Just, it is what it is. And then we started floundering. And somebody was asking this morning in the level 1 class, Brian, can you just sort of review how you draw your fibs and how you have extension levels line up with retracement levels? So I don't know whether, Karma, that was your question, and it only took me 49 minutes to get to answering your question. That's not bad. So here is an example, and keep in mind this is operating off a lower time frame. So this is the trader's life. If you're not a trader, get the fuck off this time frame. I just dropped the F-bomb, but seriously, folks. Those people that have solid trading plans and understand trade location, understand things like divergence, and understand things like structure, understand, liquidity pools, understand, interpreting candle patterns, all that kind of stuff. Great. I'm just going to use this for illustration purposes. You could easily do this off a weekly price chart, same thing. But here's an example where I start off with just identifying reload zones. Remember we said this was our big trading range. So the first thing I throw on is our reload short zone. And notice 78.6 just so happens to line up with candle body highs off of this wick. What a coincidence. And also too, we've got some trend lines. You'll do that in level 2. Don't worry too much about that right now, but just understand this. We rallied up, tried to get up to 61.8, and then started floundering. And then, not only did we start floundering, but we actually even put an M in price right through the reload zone of this particular range. So, on this event, and that's where I sort of did this study, and you're thinking, gee whiz, sure looks like the market wants to come down. Well, I can draw a reload zone off of this rally high back down to this low, and it gives me a reload zone, which interestingly enough lines up with a horizontal support and resistance level off of this low. Remember, that was the panic dump low that all the Mountain Man level bidding people level bought. This was the divergence candle that had gone too far. This was the counter trend rally following that divergence. So in essence, really, on this divergence, we now would like to see some sort of structure, give us a W kind of idea to work with. And as I said, after the bounce, counter trend rally, and we set up a reload short zone. And you can see, I don't know whether you can see this M here, but we went up, down, down. Looks like we even confirmed there. Rallied back up, and you could even, what's really freaky about this, and this is now, again, totally lower time frame, just using this for illustration purposes. But ironically enough, on this fail, you could actually even hunt reload zones off of these to try and get in off of that short. So you could say, okay, it looks like the M confirmed here. I'm going to draw my reload zone back up against these highs. And gee whiz, there's a trade window. I mean, what do you think? And, I even put a tweet out earlier today basically along these lines. I'm not going to tout that I took the trade because, frankly speaking, I was in my bed very snuggled up and not even interested in trading. But this shit works. You want to learn it? You want to learn this idea of location, right? I mean, this stuff works. So at the very least, just leave yourself open. And it's great, all you YouTubers, you're doing this, to new ideas. If you've never seen fibs at work, at least leave yourself open to ideas. And of course, if you want help on, okay, well, Brian, I think I understand the concept. Now, how the hell do I go from, okay, I see a reload zone to, okay, now I'm actually managing an actual small business of trading, taking trades, appropriate stop levels and all that. That's what our school is all about. And really, I think we do a really, really good job. I was in class listening to Grimm today. Just a fantastic instructor for the level ones. Murat's in there TAing up just a storm. Of course, I was also in there throwing in my 2 cents every once in a while. So I think we do a really, really good job teaching these people and everybody who's taken the course sort of what are the basics of running a small business of actual trading. But, regardless, I mean, these levels are just sick. And this stuff works. It's just a question of can you manage yourself and actually put yourself in a position to pull the trigger when you have to. Whoops, I just closed that Twitter window, didn't I? I want to keep it open just in case. I want to make reference to that. So, where was I? Oh yeah, okay. So now now I'm on a 10-minute chart. Gee whiz, this is crazy. But anyway, hopefully that just illustrated to you like a trader's trade was definitely through there. But now we're not in that range short anymore. We worked our way back down to the bottom end of the range. And here we are at a level. And I thought this was fascinating because, like I said, what I want to do for the level oneers, and this is sort of to answer your question, Karma, is how do I use the extension tools to sort of validate levels? So we had a trading, the market jumped up here, and then we had a trading range established, and then we failed and we lost the bottom of the trading range. Well, that means if this is a range here, we can take our fib extension tool and just simply draw 100% of the range. And then if we ask, okay, we're going to lose this range, where are we likely to go to? And who knows what this number is called in mathematics land. Right there. Pretty important number to mathematicians. They love that number. Anyone? The golden ratio from Mr. Won the contest and is just kicking ass karmically. Hey, there's Sjord. Hi, Sjord. Didn't we make a reference to Sjord earlier or something? For everybody who was, a level oneers, we sort of Grim walked you through a typical day in his trading life. And he said one of the things was he likes to come on the TRI site and review the screeners first thing in the morning. And Sjord has told us that the screener engine will be back up and running by the end of the year. So you've got, 4 weeks plus 1 week. You got 5 weeks to go. It's coming down to crunch time. Anyway, there was something else that we were talking about Sjord. I can't remember what it was earlier. Anyway, I've completely lost my train of thought. Sorry. Anyway, point of the matter here is 1.618, and there's 78.6. Remember we made reference to that tail of that original dump and how this was the divergence dump. There is that original empire. Wicks and tails like to be eaten, and can you see the process of them basically releasing all the bears here? So as price comes down into here, all the people that shorted this tail are like, oh, thank God, oh, get me the hell out of here, and oh, up goes price. I thought that was really cool. But also too, this is such a great analogy of a range trader's life. You just don't know. And, I don't know whether anybody who's on YouTube actually knows this. And actually, hit the like. There's 77 of you. All 77 of you in unison, hit that like button. I want to see it explode higher here. And then all of a sudden we have a whole bunch of downvotes. Downvote, 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 downvote. Oh no! What are you doing? Oh, there you go. I got through to 2 of you. Hey, woohoo! Oh, look at it jump. Hey, this is kind of fun. I should buy thumbs up futures. Can I buy options on this? Is there any way to trade this? This got to be tradable somehow. Oh, look at it sticking up. I hear 26. Can I get 27? I got 27. All right. The gentleman in the corner there is bidding. Do I have 28? Can I have 28? 28. There it is. All right. Do I see 29? 29, 29. Sitting at 28. Do I have 29? 29. Come on, 29. Come on. Whether I see you on the phone talking to your client. Come on. Give me 29. Give me. There I have 29. 31. Oh my God. There's that white knight coming in out of the corner. He's waving his arms. Oh, now the guy beside him is bidding 32. What the hell's going on here? It's out of control. Oh, I'm having fun. Sorry, everyone. All right, where were we? Once upon a time. So I don't know whether this is of value to you, but this was supposed to be for Karma. Karma, can you see how I took my fib extension tool and I validated the reload zone, the 78.6 and the 1.618 level? You see how those two line up? And a trader's got a trade? What do you think? Would you have been pretty happy with a fill right off of that tail? can you see in this case, I have just one hell of a sick-ass trade location. Now, I'm not saying that I did this trade, but this is a good illustration of how you can use overlapping fibs, in this case extension, and in this case retracement, to point out trade levels. And really, I think, a trader's got a trade. That was the trader's got a trade level right there this morning. And if we drill down to trader's got a trade, they're looking at these really lower time frame charts. Look how all that developed in there. Huge wick, huge tail. You can see the massive fight. The algos probably were all going crazy with each other through this. So, really interesting illustration of levels. And actually, that level was actually that low right there. So, ironically enough, it touched it, and it was like a hot stove, right? The price touched it and just took off out of there. Would have been interesting had we been recording the DOM. I bet you there was some pretty fat, big buy orders sitting down at that level to make that do that. So, interesting illustration of a sort of a trader's life. And Karma, does that help you? Did that answer your question? I see. I would be very, very happy. I mean, that would have been... and I used to know guys who actually trade those. It's not an easy life, trust me. Because ironically enough, at that exact moment, everybody in the public is thinking down. When, of course, actually you had to be thinking about, I'm going to step in. And really, this was your risk window, was basically that bottom there. And interestingly enough, too, this is actually a really cool illustration. And let's see if you guys can connect the dots. What is the term on TRI that we use to actually mark where the smart money said no more down and you go up? And how do we define that? You remember that, Karma? Karma. No? You're in level 1, I guess. So, good job. Excellent. Kevin. Good. Rocker. Good. No. The guys in the lounge here just answered. So, actually, maybe why don't you go back through your material. But I'll give you a hint. It's the bar that made the low plus the preceding bar. So really, we would say this bar plus this bar is where sort of, somebody was just dumping, and somebody bought all this up and said, no more down, you go up now. So that level combined with 1.618, combined with 78.6, combined with this horizontal support and resistance level, almost think of this as like a fractal unto itself, combined with the institutional fingerprint, if you bought this level, then what you're really saying is, I'm just going to join these guys, and if they're proven wrong, just get out. Simple as that. Make sense? Now that, I'm not saying that's easy trading. Not saying it's easy trading at all, and of course, remember, we're talking like super ridiculous lower time frames. So unless you have a bulletproof trading plan, unless you've got at least a good sort of year or so of serious market participation under your belt, you shouldn't even be looking at this chart at the minimum. So let's get the hell out of there. Okay, so that I just wanted to speak to Karma's question there with regard to fib extensions and retracement levels, and how you sort of use that tool to identify just sick ass levels. And you can do it on the way up too. I mean, there's no difference. We could do it in a bull market, same thing. Where to be thinking about shorting. Okay, now what was the question that Casper had? Guys, that question was about what you meant when you were talking about the program to have signals automated using TradingView and 3 commas. Oh, well, actually, it was about this time last year. I got together with a couple guys here locally in Vancouver, and we were really close to just putting together a nice little sort of how to log in to AutoView, how to open an account, how to connect your signals that you're either generating through your email or you're getting them sent to you via SMS or something along those lines, and have the system automatically execute the trade idea through sites like AutoView or through 3 commas. It never came to be. It just, that's just the way this life is. Sometimes things work, sometimes they don't. The site itself, and I'm super stoked to see it. I won't show the public, but I do give TRIers a little sneak peek every once in a while. The site itself, and as I had sort of said earlier, Sjord, that must have been the reference that I was making for you, Sjord. But the site itself should be generating a lot of these signals. By January 1st, we should have our screener engine back up and running, spitting out signals. And really, the purpose of that course there, Casper, is just to dovetail with, students in the level 2 program are given my DI script, which is just a very generic template on how to build a trading system, if you will, using Pine script. As well, we have the I want to be a day trader script floating around the site that Peter's been working so diligently on. All of those scripts and pages like this and stuff, they're gonna spit out, oh, buy this at that level or sell this at that level. But how do you take it to the next step? How do you actually connect your email to the actual trade execution? And so the whole purpose of what I wanted to do was just create a little dovetail sort of mini course on the site. This is how you set up these automated trading. They just go that last mile that I was sort of missing. Because like I said, in the level 2 program, we go through the whole process of building scripts and getting signaling systems automatically generated. Like I said, this is Peter's, so it looks like the signal's just working away, doing its thing. And as I'd said, we've got to the point where this signaling system is almost robotic, right? We've actually got the background script telling us about market state. We've got the fractal indicator working away, and we actually even have a trade signal generator signal working away. So the question is, how the hell do I set up the BitMEX or whatever it is I want to use to actually execute the trade when the system tells me to take a trade? And that was the whole purpose of that sort of side course. And, and just a general message to all TRIers and people that are watching this video. If you are fluent with, and really probably just TRIers, please. But if you are fluent with 3 commas and AutoView and articulate and can educate well, Grim has said that, hey, he'd be more than happy to throw together a few videos to do a tutorial walkthrough. Yeah, I don't want to depend and wait on him. If there are other people, kind of like what you're doing, Peter, with this scripts, that you see on the screen right now, if people want to take the initiative, TRI is an equal opportunity employer. Right? If you can bring it, then we want it. But at the same time too, because I think I'm fairly comfortable talking to people, I almost take it for granted how easy it is to communicate the ideas that are in my head in an articulate fashion, step 1, step 2, step 3 kind of thing. So it's not an easy task by all means. But the point here is, specifically to your question, Casper, we are still looking for that sort of hand-holding service for people to go that last mile. Where, look I've got my scripts are telling me signals, or I'm subscribed to services that are generating signals, and I'd like to have the computer execute the signal. So there you go. And of course, caveat emptor, fully understand there is a lot of nuance around running these automated systems. Lots of issues around privacy, lots of issues around does your algo run away? So I'm not saying this is especially new people to trading. Hey, I heard about this thing called Bitcoin, and that this kind of conversation is not for those people. Okay, so Casper, does that help answer your question? Waiting on Casper. What's he gonna say here? He's probably not even here now. I think he said a few minutes ago, thank you very much, but I don't know whether I answered his question. All right, so let's see what YouTubers are thinking. If we don't have any pressing questions, then I think I'll probably just leave it at that for today, guys. I will say some really interesting action in altcoin land. I actually really, I do remember squawking to you guys about Mona recently. Does anybody remember me talking about Mona? Look at what Mona's doing in the face of this. Ah, you son of a gun. So there are actually names that are going up. All right, cool. So I did answer your question, Casper. Cool. Obviously in the broader market context, Ethereum, Litecoins, Bitcoins, all the big names. I think I've shown you like those trend models. I'll just throw it on here just so you guys can see it again. There's from the big names, I'm not overly impressed. And if anything, I'm thinking if you really want to participate in those big names, maybe you're working stink bids against bottom ends of ranges. But you can see, what direction is the trend? It's not, it's not friendly. I'll tell you that much. It's a trader's life. You want to try and take shots against the bottom ends of these ranges, play the inside bars, okay, but if they break the lows, you know what you have to do. You want a little old lady, this kind of stuff, because we're off of like higher weekly time frame levels, and you've done your due diligence, and you believe in the fundamental story, okay, but understand that you might be sitting on them for a while. And then, I don't mean to sound like a broken record, but the irony of it all is I still think this is a coin picker's market. So you got to get in there and you got to identify when you start seeing structure, right? When you start seeing divergence. And then, of course, for heaven's sakes, don't chase. I thought it was interesting, this auger. Auger's just sitting here. It's like, so what? Bitcoin's going down, so what? It doesn't really care. I'm not telling you what to buy. But, I did put some of my own money into Auger. I did put some of my own money into Mona. I got a whack of money in Mona. I bought this little one, right? Algorand. It's just sort of sitting here, just twiddling its thumbs. I'll buy some more down the bottom end of the range. But I definitely think you got to be very selective. You got to be patient. You got to work levels. You got to identify what it is that's actually going to get you to take your money off of your hip pocket. Here's a good example, this EOS. I know a lot of people were jazzed about him. If you had played this W bottom, well, that W bottom has been broken, right? If that was your thesis to get long, then if this was my money, I would say my thesis has been broken and I have to wait for the next W to put my money to work. This is a trader's life. Get used to it, everyone. If you do want to go this route. That's why we build that sort of little old lady risk management, because when I was a stockbroker, I had a lot of people that were like, Brian, I don't want to be looking at the charts. I don't want to be looking at the screens. I want to buy a little bit of this. All right, well, don't take too much risk. You got a certain amount of money to work with. Don't break that 5% rule ever. But if anybody wants to try and time their purchases on names like this, I would say the market has told us that this idea is no longer valid. And you got to wait for the next W to come in. And it might look like this, where you had this cute little W. Maybe you took some profits. Maybe you just sat there and did nothing and you got stopped out, and then in comes the next W, and you might have to do this a few times. That often happens. And especially while you're trying to like hunt for the turn, right? The weekly charts are trying to turn. You can often get like false starts in markets. That happens a lot in trading. It does. It's just brutal reality. So anyway, there's an example where an altcoin broke a recent W, and were you taking a trade off of this, you got to lick your chops and walk away. This is also, too, I think, a good testament to, before we leave this topic, of why I like using these reload zone concept. Maybe instead of buying that W, you were working reload zone bids. So you would have done nothing there. Then finally you actually get your bids filled, and then your risk window simply becomes, look at, I bought here, and now the market's told me to get out, so I just got to walk away. So that's one reason why I do like reload zone bids, and it's also a good example of, sometimes these reload zones don't hold. And you got to, man up, lady up, whatever the hell you want to call it, and say, look at, this thesis was wrong. Next bus in 10 minutes, capital preservation time. All right, so you guys are squawking about data. Let's see what the heck's going on with this data. Where should we do this? I'll do a new chart. Not that I don't have enough charts open already. Data. All right, streamer data coin on Binance versus Bitcoin. Do we have cash proxy? Yeah, actually, Grim made an interesting comment. Oh, son of a bitch. Yeah, look at that. I told you, one of the reasons why I do like doing these shows is sometimes I get some fucking cool ideas. Interesting. What's we got here? And I dropped another F-bomb, didn't I? Tisk. Right. Such potty mouth. Not bad volume. Somebody's stepping in on the buy side. I can't really comment on the FA, but I do really like this bullish divergence in OBV. Oh my goodness, that looks awesome. We don't have enough data to really do any kind of price momentum push analysis here. Oscillators, actually really did get stupid. That's interesting. Oops. Nice breakout in RSI. It looks like you're a little bit late here, though. Boom. So that's sort of 2W kind of thinking. There's your first W. And there's your second W. So RSI was going all ballistic here, right on, well, I guess that was yesterday, and this is a weekly chart, isn't it? So it's basically this week. Yeah, that actually, it corresponds with the breakout. That's not bad. Of course, half the problem is this is Saturday. Ooh, wow, look at that volume. So there's your daily chart. No divergence here. There's your trading range. Pretty straightforward. And I think the basic premise is buy the W. Risk against the bottom end of the range. And you would ideally like to see at least a 2-to-1 to justify it. So I do like how you're getting a lot of internal confirmation here. Another W. Wow, violent move there. Actually, oh, interesting. So there's the W there on RSI. So nice breakout there. 2 2 to 1 would imply that we have to go up into that range there. So that might be asking a bit much. I'm not quite sure where the lowest low is. There. What is that? 89.9. 89.9. And what's this low? 90. Oh, okay. So this is the lowest low there. So actually this is kind of cool because this is like a narrow sideways channel within a narrow sideways channel. There and there. So I do like the idea. Probably if you want to try and sneak in. Notice how there's this hole. Maybe you could probably and the problem is, you know, how thin is this? But if they're running this thing, it probably won't look back. But, you know, there are some levels to work with. So there's that double bottom off of that wick high. My hunch is probably like the trader's trade kind of idea. They want to go off of these candle body breakouts like there. So, I guess the first, no, it never did close there. So the first close is this one. If you're just looking at this, 50% rolls. Aha, look at that, eh? Oh, gosh, so cliche. So notice that the candle body breakout level is probably the trade. And gee whiz, what a coincidence. Exactly 2 to 1 to the 50% roll. So that's probably the trade. If we don't hit that 50% roll and we have some sort of pullback, then my hunch is you reload zone this stuff. Sorry. And we're going to do reload zone. And what a coincidence. Look at that. So you can see how the reload zone basically lines up with that original breakout level. So anybody who's interested in the data, like remember Brian's a cheap ass. My hunch is probably if we break this down into lower time frames, we'll probably find some gaps in there. But if Brian was, you know, cheap ass, wanted to buy value, I would be working my bids down here at the POC. Maybe even like that 61.8 just for fun. So what is that? That's 1307. Let's go see what oh, there we are. Is this open to Americans or is this one of these I'm a suspect coin and only if you trade internationally you're allowed to trade this? Oh wow, what a different story there over on Trex, eh? Is this the same thing? Jeez. Looks like apples and oranges. Streamer. Nope, it's not the same thing. Oh, data DTA. Haha. Sorry, everyone. Data. Okay, where is that? Oh, so. Oh, data. DTA though. Something's a bit suspicious there. So it doesn't look like it's on Trex. DTA. No, that's something else. So it's only on Binance. This must be one of these international names. So it's looks to me like it could be a you know, maybe one of these Binance pumps kind of things. Wouldn't surprise me. But that DTA on Trex reference is totally wrong. Disregard that. If we look at it, so here it is versus USD, and I personally like to look at these things versus USD. If we look at it versus Bitcoin, I think everybody should look at this and go, what do you think? If somebody saw this, yeah, Colin, did you see how I corrected myself there? Are we allowed to chase that up there? No. You know, if you wanted to, I wouldn't have a problem with you starting to think about you know, working bids. And, you know, what a surprise. The original bottom is now probably going to be key support, especially that cheeky little tail right in there. So if you're interested, I might even suggest, you know, throwing in a stink bid somewhere in that level in there. And of course, if they keep blasting this higher, you're going to have to drag that up. And I wouldn't be surprised if the end of the rally actually sets up something like that, where the 78.6 is actually going to line up with the original breakout level. So believe it or not, I could actually see them take her all the way up here before this happens. So as it stands right now, you're kind of just looking for that outlier. Sometimes, every once in a while, it happens in crypto. Maybe the next bar is a big down red tail that dips down into reload zones and then cranks right back up. You know, I think the bulls got the ball here. No doubt about it. The problem is you're coming to the story pretty late. So, all right. So I hope that helps. It is now 12:30. So I think I've been blabbing away for an hour or so. Hope you guys enjoyed the offering. Thank you very much for all the upvotes. That was fun to watch. We had a nice little auction there. Felt like I was back in the cattle pits. Anyway, answered the questions for the level 1ers. I spoke to a little bit about what I'm kind of thinking for the corn here over the short term. Traders, yeah, I can understand levels coming in. Higher time frame investors, cool your jets. And I hate to say it, but I've been saying it repeatedly of late. I still believe this is a coin picker's market. And if you can find ideas that have good solid W's, kind of like this data here, obviously this guy doesn't give a rat's ass what's going on with Bitcoin right now. And I actually think this is the kind of environment that we're in, is go and find your ideas. I think it's a good idea to do your research versus USD. There are names that are going to pop. This is a wonderful environment for all of you really smart crypto people, because now the bullshit is gone from this market. Kind of what Alex Sturck said there a year or two ago. What we really needed was we needed a developer cycle. Well, that's exactly what we're getting. The public has been destroyed. They've lost all confidence. They have no interest. Big public figures like that Mr. Brandt guy basically saying everything down. It's all a scam. Get out. But you know, anybody who bought this son of a bitch here off of this double bottom here at, what is that, 1.3, sitting at 1.78 right now, they would probably disagree with Mr. Brandt. And frankly speaking, I think there's probably lots more of this to come. So hunt those W's. Find those good fundamental reasons, fundamental stories. Build a better mousetrap. This is the perfect environment for that right now. All right, everybody, have yourselves a great day. Hope you enjoyed the offering. You got some value out of this. All the best. And the only thing left for me to say at this point is a big bye for now.